All right, good afternoon, everyone. It is Friday. Welcome to the April 29th episode of Around the Block. I'm your host, Dave Yornak, and I'm also the Director of Blockchain Strategy here at TronDAO. Around the Block is another way that TronDAO continually engages with our community and is part of the commitment we have to our community's growth and success. The Around the Block series brings together blockchain and crypto leaders to explore the technical, strategic, and even social aspects of our industry. And you can find Around the Block Live each week on our DLive protocol, as well as the TronDAO YouTube channel. DLive is one of the largest blockchain live streaming services where each person can become their own broadcaster with their own channel. Now, joining me today, we have a couple of very heavy hitters from the world of Binance, from the company Binance. They're Gianmarco Gonzalez, Business Development Associate, and Nicholas Sismel. He's a Listings Research Analyst. So guys, welcome. Thank you for joining us today.
Thanks for having us.
Thanks for having us too.
Yeah, so Binance, obviously a huge company, amazing growth, but you guys are part of Binance US, which is still relatively in its infancy. Really just kind of getting going. When did you launch here in the US?
In 2019.
Okay, so fairly recent. Let's talk about a little bit about the centralized exchange space and how you see it evolving, and really what's your take right now on the space as it relates to the functioning of the centralized exchanges within cryptocurrency?
Yeah, happy to elaborate further. So I think currently the way that centralized exchanges function is really as an on-ramp and an off-ramp to both the fiat and the crypto worlds, right? So it functions almost as a bridge. I think that another perspective that is oftentimes not very well recognized is the fact that it also serves as a bridge between different layer one protocols, right? So as long as the centralized exchange has integrations between a variety of layer ones, it can also function as a centralized bridge, so to speak.
Yeah, that's really very interesting. And I don't think that's something that's captured by a lot of people, particularly the idea that it's a kind of a multi-chain bridge, right? So when you say that, you mean people are trading in a variety of currencies, a variety of cryptos from different chains, whatever they might be, and they're buying, for example, let's say they buy Bitcoin, then they buy an Ethereum, then they buy something else, then maybe some other altcoin on a different chain. Um, and in effect, what they're doing is accessing those chains via Binance,
Yeah,
right?
that's exactly right. I think that, to put an example to this, if you want to go from Ethereum to Tron, for example,
Hmm.
as long as, the exchange you're working with, in this case, Binance US, has native network integration among those L1s, you don't have to run the smart contract risk or the bridge risk of a single point of failure like a decentralized bridge might have, right? We saw that with the wormhole hack.
Yeah,
All of those funds are at risk, and if that's not backstopped, well, the users are the ones holding the bag.
yeah, interesting.
Yeah,
Nicholas, go ahead.
I was just gonna say that that's one aspect of centralized exchanges. There's also, users who probably aren't aware or that knowledgeable about the decentralized space with, using, uh, you know, going on to Ethereum with their MetaMask. So another purpose that centralized exchanges serve is educating the new user, onboarding beginning users who just want to get their Bitcoin or what have you. And we do that through, our blogs, our educational purposes, the way in which we list tokens. When we list a token, there's so much that goes behind the scenes with compliance and legal regulations, so that every time we list a token, it's almost, you know, there's a lot there's a lot there that the customer can feel safe that that token isn't going to be, you know, a security, or that there'll be major rug pulls. I mean, there's no promises, obviously, but you know, what we do behind the scenes with our due diligence process, you know,
Yeah.
it's yeah.
That's really interesting. Actually, I think that could be an entire podcast just talking about all the due diligence and work that goes into really validating that a coin is legitimate, and it's meeting all the regulations and everything that goes into that.
Right.
That's
Yeah.
actually a
Yeah.
really interesting topic.
Yeah.
Um,
Because, you know, most people don't have as much time as we do, you know, to
mhm.
research every project out there, every token out there. So
Yeah.
we kind of do the work for them, so to speak.
Yeah, and when you think about it, really what Binance is doing is you're connecting parties, right? And you're transferring information. And that information happens to be in the form of coins. So, if you think, all right, as this evolves, you're really this kind of portal for information to pass through in a safe, secure manner. What about payments moving through Binance, or what about other types of information moving through Binance via, some type of via some secure blockchain, because really that's what you're doing.
Right.
Would that be hard to envision, or, is that, you don't have to tell us if it's on the roadmap, but, is that something that would be feasible down the road?
Yeah, I definitely think so. I think that part of the benefit that a centralized exchange does offer is the fact that, if you talk about some of the larger ones like Binance and Binance US, many different retail users exist on those platforms.
Mm-hmm.
And as long as you are able to connect the information, as you mentioned, between those users, it's almost instant, and very cost effective to transfer currencies in a variety of forms on those platforms themselves.
Yeah, you can see
Right.
that having multiple applications, just having that infrastructure. And I mean, let's face it, DEXs are increasing their market share, but and that's fine, but as the whole community and as blockchain and crypto all evolve, there's going to be additional businesses that centralized exchanges can really participate in, I think, right? And
Right.
play a much broader role in the economy than just simply being facilitating the trading and exchange of coins.
Yeah, another issue, you know, a lot of my friends or family, they're like, what can you do with crypto? Can you go to the store and buy groceries with your crypto? And, you know, centralized exchanges are kind of that bridge between what we're seeing now within the crypto space and traditional finance, you know, implementing debit cards and things like that that are bridging the gap to what, you know, Satoshi wrote about in the original white paper of Bitcoin, is that he initially wanted Bitcoin to be a peer-to-peer payment system,
Right.
which is not what we're seeing. We're seeing Bitcoin and crypto being more so of a store of value, or Ethereum being, you know, like a bond system. So I see centralized exchanges playing a part in that. You know, maybe Satoshi didn't see Bitcoin being as centralized as it is, or centralized exchanges adopting that peer-to-peer payment system with debit cards or what have you. But you know, that that's the that's the road we have to take for now, until, you know, one day we could use USDT or what have you at the grocery store.
Yeah. Now, is it correct that Binance US has an agreement with Visa?
I
um,
can't comment on that.
Okay. All right.
But I
I think
think
it's
I think
public. I
I
know
think to
Binance does on some level.
sorry, I was just gonna say, I think to go off of Nicholas's point earlier, right? Like they do function as these bridges between the current world of fiat, where most people earn their paycheck, right? The largest value of money is still denominated in fiat currencies.
Sure.
And so there will be a concentration between the world of fiat currencies and crypto at those friction points, right? At those connection points, right? And so I think one of the biggest applications is not just in retail, but also the flow of institutional money, right? Yeah. The biggest application, I think, or I should say, the most important connection that centralized exchanges could facilitate is the trading and the entering and the exiting of capital from the fiat world into the crypto world via institutional trading, right? Most of the money in the world as it exists today exists in the form either controlled by an institution or heavily influenced by institutions, stored at a bank account, for example. That is technically institutional capital. So I think that is one of the often maybe undervalued aspects of the function of a centralized exchange.
Yeah, I think that's a great point. And I think that's certainly going to be valid going forward as we're seeing more major capital markets institutions get involved more deeply into the crypto world. I would think that they would begin to access some of these centralized exchanges and leverage them much more.
Definitely, yeah.
Great. Okay, let's move on. So, one thing that Nicholas, you mentioned early on is the listing process. Could you perhaps go into a little bit of detail about some of the, and you don't have to get too in the weeds, but just maybe at a high level, talk about some of the things you need to verify and check before something gets listed.
Right. So, we have many mechanisms in place, security, risk, legal mechanisms to check every token that we're interested in. The main mechanism is deciding whether a token is a security or not. And that's roughly done by the Howey test. The Howey test was a Supreme Court case in 1946, I believe, SEC versus W.J. Howey. And this provided a test, a four-prong test. The four prongs are investment of money, common enterprise. So these are the things that a security would entail. 3, expectation of profit. 4, to be derived from the efforts of others. And we mostly look into 3 and 4. So the expectation of profit, we look at how projects are marketing their tokens, if there's security related language. We look at how functional the token is, because how functional the project is, because if the project isn't that functional and there's not much adoption by third-party users, then the token doesn't have much utility at that point. Let's see. To be derived from the efforts of others, that mostly has to do with the decentralization of the project and the token. So we look at how involved the issuer of the token is in the project. If it's a centralized exchange versus a DAO, or whether there's a governance system in place, or we also look at the nodes operating in the projects and the token wallets to see if there's a centralization of a high percentage of holders that might have some impact over the project and the token. Sorry, there's ambulance going on.
That's all right. Those are not coming for you.
No, busy straight.
So let me ask you this: Do DAOs require a different process than non-DAO organizations? Is it kind of more involved in what you have to go through?
Good question. DAOs.
I think off the top of my head, in terms of DAOs versus non-DAOs, a project that is controlled by a centralized foundation, so to speak, to push the ecosystem forward, the values, etc. It's a lot easier to do business with a centralized party because decisions can be made quicker. You can get signatures quicker. You can, sign NDAs quicker, et cetera. So that is one of the advantages to working with a more centralized party. The DAOs, of course, the decision-making process is by nature more decentralized. So it takes a little bit longer, but it's not exactly a make or break for us.
Right. Yeah, it's just a longer process because DAOs would, there are times where DAOs will have to vote on if they want to be listed on an exchange or what have you.
Right. Yeah, that can require some time.
Right. Just another thing to throw out there that we do in the listing process is, on-chain analysis, compliance, making sure there's no suspicious activity. That goes back to the point of what centralized exchanges can do for users who may not have the time to research. We're making sure that there's no suspicious activity or potential rug pulls or things like that.
And you do obviously your due diligence on things, on items you list on the exchange, and then you also do KYC and everything on the people that are trading there.
Right. Yeah.
Okay.
And that's not our department, but that's compliance and risk management. It looks into that.
Yeah. So has the number of people in compliance and risk management grown to be larger than the people in technology yet?
That's a good question. I don't know the exact answer. I mean, I know that we did, as I'm sure many of you saw, we just closed our seed round. So, we have plenty of dry powder to expand the operations, many of which will go towards customer service, customer success, as well as scaling up the operation in each of the departments, including listings.
Yeah, well, I can tell you, just speaking from experience, I was working at a large custodian bank around in the in the early 2000s, late 2000s, and 08, 09, 10, 11, you really saw the biggest area that was hiring was risk and compliance, and it became one of the largest groups within the company. Now, hopefully, that same thing doesn't occur in this world, in the crypto blockchain world, because quite frankly, I don't think blockchain really requires that. Also, there's a whole issue about requiring financial services companies such as yours to become law enforcement agents. That's really outside of the boundaries of what the intention is. So I think it should really try to keep it at a minimum.
Right. We're not here to be the police of anything.
Right.
That's not a role that, we often find ourselves in. So that's not the goal, I would say, of a centralized exchange.
Yes.
Right.
Yeah, no, not at all. Or really, it's not the goal of any financial institution, but unfortunately, it is something that they all have to contend with. Good. Now let's jump on. Just if you could talk about adoption that you're seeing really around the world in terms of crypto trading and maybe how Binance is helping to facilitate that adoption.
Yeah, absolutely. So, as I'm sure you guys have seen, CZ has been kind of on a world tour. And funny enough, he stopped by Madrid a little while back and gave a lecture to, at a university where my younger brothers were. And they came back to me and they said, CZ made this incredible point where he mentioned that only 5% of the world of the users are actually have exposure to crypto. And within those users, I believe it was, 10%, 5% of those portfolios. So, 5% of 5%, I'm not going to do the math on that right now, but, it's nothing, right? So, you hear the old adage of, everything, we're very early, et cetera. And I think that to a certain degree is true. I think that in terms of adoption, you're starting to see a lot of adoption, especially in many less developed countries, many in Asia. You're seeing some in Africa as well. You saw, I believe it was the Central African Republic, adopt Bitcoin as legal tender. So,
Yes.
things are definitely moving in the direction that many people anticipate it to move in. I think when it comes regarding the Asian countries that are using it, they use it as almost someone would use Venmo, right? In the US, so to speak, right? It's an instant transfer of value, right? And you could transfer stable coins, right? Instantly for a fraction of the cost that you would, a Venmo transaction, right? Um, and people are using that to essentially bypass existing financial rails, right? One of the biggest value adds that blockchain technology does have to offer is the fact that it is not existing financial rails, right? It's not slow. It doesn't close on the weekends, et cetera. So you're seeing this massive adoption happen of users, especially in those less developed countries, and they're using it, right? They're actually using it as currency, so to speak. So that is to me, that is very impressive. And the way in which they're using it as well is also, when it comes to gaming, that to me, that's the most fascinating application in that scenario is they're using it to essentially build wealth because they can accumulate this digital currency over time, and that's not even touching on NFTs, right? That's a whole other conversation.
Yeah, no, I completely agree with you. I think play to earn gaming is I think one of the potentially greatest innovations, in quite some time because it really gives people a new way to earn money that perhaps wasn't accessible to them. They can earn more money than's possible in their local economy without necessarily leaving their local economy. So I really find that to be fascinating, and really one of the great aspects of blockchain and crypto.
I think NFT gaming is one of the most fascinating subsectors right now that is very emergent in that there's a lot of competition, and you're seeing the ones that really gain traction have strong in-game economics. Now, where the in-game economics kind of fall apart is when the prices start to rise dramatically, right? Because there's just not enough items, right? And so people want that price appreciation of their items, but the conflicting interest is the projects themselves run into wow, everything is way too expensive to onboard any new users, right? So it's kind of this interesting dichotomy of how everything is playing out. So curious to see how that evolves.
That's interesting. When you say everything becomes more expensive, what are you referring to? The
So
items in the game, or getting online, or what exactly?
Yeah, so we'll just call it friction, right? So any new user who wants to onboard to Axie Infinity at its peak, you're required to buy X amount of Axies to get started off, right? And at a certain point, it was like a few $100s to even just start playing the game, right? And we're not talking about gas fees at that point. We're talking about costs to play. And so as those NFTs increase in value, it benefits the incumbents of the people who were early, right? You saw the same thing with DeFi Kingdoms, and I'm sure there are many other examples that I'm not mentioning just yet.
Yeah, on that point, Gianmarco's definitely right. One thing I'm excited about is seeing the wave of fractionalized NFTs. So people who have these expensive NFTs that can be used in games, use them as in-game assets. Fractionalized NFTs are allowing other users who may not be able to afford that NFT to buy a portion of that NFT, use it in the game, use the utility of that NFT, and reap the benefits, so to speak. There's also NFT lending. There's a lot of platforms out there that are allowing users to lend their NFT for a particular APY. Things like that. I feel like we're seeing, at first, Gianmarco's definitely right. We're seeing, the rich users reaping the rewards, but as time goes on, it's definitely being more decentralized and more equal with how the way in which NFTs are coming about, fractionalized NFTs, like I said.
I think to
Yeah,
kind of
that's what we're here for.
I think to continue on with Nicholas's point, it's, you know, NFTs are so broad in their application that, you know, it doesn't just apply to, you know, gaming, right? Where you're, you know, potentially building wealth over time, you know, hopefully with, you know, in some future, the interoperability of some of these games, right? Where the effort that you put in doesn't just go to waste because it's stuck in some game that you've invested 200 hours into, right? That value that you have accrued in that one game just is parked there, right? When you build an NFT gaming, an NFT game on a certain L1, you can then transfer that value to another game that is also built on that L1 and around the, you know, larger blockchain ecosystem, right?
So wait, let's stop there a minute. So you're saying if you have a game on L1, you create some items within that, whatever they might be, you can take those items, port them to another game on the same or different L1.
Right. So that's one example.
Okay.
Yeah, that's one example. So for example, right, like if you have a cool Fortnite skin, right, and you want to port that over to some other game, right, that requires a lot of interoperability amongst those games. Another way in which this exists is you could accrue the digital currency in one game, and then you could just swap it for a stable coin and then bring those stable coins to another game. And all of a sudden you're starting out level 0 on, you know, insert game here with, you know, $1 million, right? Like that all of a sudden it snowballs over time.
You build your stake.
Yes. Yeah. And you can essentially build a career, right, off of your time invested in gaming, which is a concept that I don't think my parents would understand at all. It's one of those funny things, you know?
I definitely heard that you're not going to make any money from, you know, gaming, spending all my time gaming when I was 12 years old, but you know.
Well, you were just early. That's all.
Take that, Dad.
Yeah, no, exactly. It's fine. Now you'll be able to do that pretty easily, pretty soon. So that's good. So that kind of leads to another point is they need this, people doing that need somewhere to exchange or connect with others that might want to trade their NFTs or other things. Now, I know you can't get too far into NFTs and what you might do with trading, but speaking broadly about NFTs at centralized exchanges not related to Binance, do you think that, you know, clearly, I think Coinbase has announced they're rolling out some type of NFT marketplace. You know, so they're clearly getting into it, and it's going to, I would imagine that they would include gaming pretty quickly. Do you think that's in a centralized exchange is going to be the primary way for NFTs within games to be exchanged and traded, or will it be more direct?
I think.
Oh, do you want to go?
Sorry, Nicholas. My take on this is that I think every major centralized exchange is going to launch some kind of NFT integration at some point, whether it's a marketplace, whether it's a larger platform with other kind of utility. I don't know just yet, but I would expect every large centralized exchange to have a presence in NFTs. Now, I do think that it's going to be a lot more simple than maybe, you know, winner take all. I think it's going to be everyone has an Ethereum integration. Everyone has, you know, a Tron integration. Everyone has a, you know, an Immutable X integration or something like that. And this way, you know, once all of those integrations have been built into those centralized exchanges, you can just, you know, it doesn't matter where you are. You can just port it to anyone you want. You send it as long as you have an address. You're good to go. You know, so I think it's going to be a lot more. It's going to look a lot more similar to what we already have today regarding crypto, instead of some other parallel universe with NFTs.
Okay. Right. Yeah. Yeah. I was gonna say that right now, I see centralized exchanges being, you know, if once they're implementing NFT marketplaces, that it's gonna be more so for the beginners, until like what Gianmarco said, that once we've done more work on that that end where things are more interoperable. Um, it'll be much more complex than that than just for the beginning users. In terms of Coinbase's NFT marketplace, it's interesting. I noticed that they have a zero market fee right now during their customer acquisition mode. But if you look at OpenSea, what is there? I think it's 2.5% fee. And when you think about Coinbase, they definitely have much more employees, much more overhead. So I would imagine that their fee would be much higher than OpenSea, 3%, 4%. And it kind of worries me when you see OpenSea and Coinbase's NFT marketplace kind of competing with each other. It kind of reminds me of like the Visa MasterCard debacle where they're raising fees as much as they can. So
Yeah.
that's one thing I worry about is the fee aspect.
Yeah. I mean, that's a good point. But one thing the crypto world has shown us is that if people don't like what's happening, they'll build their own. And I
That's
think
true. Yeah.
I think that's how DEXs really ended up getting started. And if the established institutions like OpenSea and Coinbase fees are too high, then look for a decentralized option to be coming along to facilitate low cost
Yeah.
exchanges and
Or
trading.
or look for another exchange with
Yeah.
much less
Yeah,
much
eventually,
less fees.
I think high prices are really going to be difficult to maintain throughout the life of crypto because there is such a great deal of competition that comes in, that it can come in rapidly. New entrants come into the space all the time. Even for companies as big as Binance and FTX, there's always new players coming in with new offerings, whether it be decentralized or otherwise. And because of that, I think all the prices are going to tend to trend lower over time. And what's really going to be a differentiator is interoperability and providing a great customer experience.
Right.
And that's what I think is going to be, those items will be much bigger drivers than price, because over time prices will tend to trend lower.
Right.
Agreed.
Yeah, I agree.
I think another prong to what you were saying before is users should be rewarded for using your platform rather than penalized with a fee, right? I mean, and it's
Hmm.
some kind of fee as long as that fee market works itself out amongst those different exchanges makes sense. But users are going to trend towards where they're going to be rewarded on trading, right? Whether that's the fictional OpenSea token, right, in some parallel universe, right, or whether that's looks rare, or whether that's another exchange, right? Users are going to go to where it's most profitable for them to trade. And of course, they are going to take into account security. They're going to take into account the user experience,
Hmm.
customer service, et cetera. But I think that the reward system for trading on an NFT platform is going to be a big driver in the future.
Yeah, interesting. Interesting. Yeah, and since we're talking about this, another thing I hear people talk about, I was at a conference earlier this week on a panel, and we were talking about user data, and I still don't think, it seems like we're not fully grasping Web3 and what user data will be accessible. I don't think, and this is a little bit off topic, but the data is just not going to be accessible. Users are going to own their data, and they'll have to grant permission for someone to gather that data. Whether they buy a pair of shoes online or do something else, or whether it's they're trading at a certain exchange, they're going to have to give permission to anyone who wants to use it and be rewarded for it, like you were saying. So that's another way to potentially monetize, or at least be rewarded in some way for allowing someone to know what they do.
Agreed. I think you bring up a really interesting topic of user data in the blockchain world,
Hmm.
right? That is something that I've met, in the retail conversations that I have with some friends who are not yet, crypto pilled, so to speak, their biggest objection, or one of the ones that I hear frequently, is they don't want every transaction that they have to be publicly available on the
Right.
blockchain to everyone, right? So it's almost a privacy concern for them. And I think that one of the most interesting innovations that we're seeing catch on and catch some traction is the concept of zero knowledge proofs being applied to underlying layer ones, where you can still prove to any kind of validator or proof of work mechanism, consensus mechanism, et cetera, that this transaction is valid and has been signed off on without revealing the user's information, right? So very interesting topic of how everything's evolving in that direction.
Yeah, that is. I think most people would prefer the things they do remain private and not just have them broadcast to the entire world necessarily. So that definitely makes sense. Um, very good. Very good. Um, so I noticed that both of you are wearing some Binance gear today. Perhaps I know, I want to say I was at a conference in January, and someone was wearing a Binance sweatshirt, and I asked them if they worked at Binance, and they said no, that it was like some type of special sweatshirt that they got for being some early user of Binance, and it was really like a very treasured relic or artifact that they had. So I think it makes me think Binance gear is in demand. Is there any way, people listening to this podcast can potentially obtain some of it?
So we are in beta phase of a merch store, um, and that'll be rolling out soon. So if anybody is interested in that, definitely check out our social media, our Twitter, and that'll be the way to see when that rolls out.
Yeah, I think there is quite a secondary market already for the gear
we
because
we definitely have some
yeah,
goodies planned on the way.
yeah, the person I saw had a few offers on their sweatshirt, cash offers. So yeah, that was interesting. Well, great, great. What other thoughts do you guys have on the world of crypto and trading that you want to share with the audience?
I think that this is definitely a longer term take that I have, that I would love to have more people kind of talk about, just because if it doesn't actually enter the water supply, it'll never actually happen.
Hmm.
Is, I come from the world of, real estate fintech, and I am painfully aware of the process of acquiring any kind of property here in the US. And one of the biggest blockers to acquiring any kind of property in the US, if anyone listening is a homeowner, will know, is the title process, right? The title process, for those who are unaware, is effectively tracing a chain of ownership of that property so that the buyer has confidence that the seller has ownership to sell that property. Now, I think that one of the less talked about applications of NFTs will actually be in mortgage-backed securities, right? Both commercial and residential. The applications there are, the efficiency gains there are so monumental from eliminating a very costly and time inefficient process of title is
Hmm.
incredible, right? If we can trade, if we can buy and trade whole properties like we can in NFT, I mean, that is unbelievable. But in order to do that, you have to really revamp the entire system from the ground up.
Yeah.
I've had this conversation a couple times, and one of the funny things that a buddy was saying is that, I think that the next $1 trillion personal individual or company is going to be the person who goes county to county, local government by local government, actually getting their property deeds and those property records on chain, right? That's going to
Yeah.
be such a massive value add. So that's a little
I
little
completely
tidbit.
agree that real estate is a very ripe market for disruption from blockchain. And Cook County, where I live in Chicago, actually was the first county in the country, I believe, to begin the effort to put all the title records on blockchain. And that was probably 2017, 2018. We started to do that. And I say we, I wasn't involved. But yeah, so there definitely, you can't say too much about Chicago, but that's definitely a good thing that they were trying to do. Cook County is one of the largest title depositories or repositories in the country. So it's a good first step, but that really, I think you're right, because once, the mortgage-backed security market is obviously a very large market, and once we begin to get everything on chain, that entire market could change dramatically, be much more efficient and effective and transparent, and I think everyone would agree that was around in '08 and '09 that transparency in the mortgage market is a very good thing. So yeah, I think we're definitely in complete agreement there. Nicholas, any final thoughts that you'd like to share?
Um, on that point again, just bringing up fractionalized NFTs, it'd be interesting how uh, people could co-own property through NFTs as well. That's
Yeah,
probably way way out into the future,
that
but
is. I mean, when you think about it, think of like young people starting out, and maybe they purchase a home via NFT with their parents or other people, and then over time they increase their share of owning that NFT.
mhm,
That is really interesting, and it could really change the home ownership dynamic
it's true, yeah.
within the country, right? So especially for, you could see people pooling resources to buy, significantly large homes and sharing the living space. That would work for families potentially, large families. But yeah, it opens up a lot of new possibilities, which is, another thing that blockchain and crypto are all about, more possibilities.
Yeah, I'm from Berkeley, so I'm used to 10 people living in a two-bedroom home, so
Yeah.
that would definitely be useful in cases like that.
Yes, it would. It would. All right, gentlemen. Well, thank you very much for joining us today. It's really been a pleasure speaking with you. I'm glad you joined us to share your ideas. We certainly enjoyed hearing them. I believe our audience enjoyed it as well. And again, if you missed the live broadcast, be sure to catch this on the YouTube channel at a later date. All right, thanks, guys. We'll see you.
Thanks.
Thanks, Dave.
Appreciate it.